This is TransportBT, a podcast of BT correspondents.
Asia Pacific, as we all know, is expected to be the big market for aviation in the coming years and even decades. We've got everything a potential market could want. Fast-growing economies, a burgeoning middle class, and almost 1 billion people. According to the International Air Transport Association, Apac's aviation is expected to contribute 41% of global passenger growth over the next 2 decades. Between 2024 and 2044, the region will see passenger numbers climb to 4.1 billion from 1.7 billion, with a compound annual growth rate of 3.8% projected. However, there are plenty of buts in aviation. It's a risky business sometimes, with thin margins for airlines and susceptibility to global shocks. What are the downsides to this rosy outlook, and what should we be prepared for in the region? To answer that question, we have Alan Lim, director from aviation consultancy Alton Aviation, on the pod to talk to us about this. Welcome to the show.
Thanks, Derryn. Glad to be on the show.
So tell us a bit about the company and yourself.
Alton Aviation, we are a boutique management consultancy. So we only work within the aviation sector, airlines, airports, lessors, or even investors, that are looking to the sector. We do everything from strategy, operational improvement, and we do a fair bit of transaction diligence as well, helping outside investors understand the industry and understand targets that they would like to get into in the industry. So I'm a director in the Singapore office, and my work spans across 3 main areas. One, on the commercial side, helping airlines mainly look at network strategies, fleet strategies, strategic business planning, but also on the operational side, right? How to take costs out of the business, how to improve processes, how to improve their productivity, and as well helping investors do the transaction diligence in the market, mainly in Asia Pacific, but also globally as well.
Apac Aviation, can you give us the potted summary of why Apac is supposed to be so big when it comes to aviation?
I think there are 3 main reasons. I think one is about demographics, growing populations. If you look at APAC, China, India, Indonesia, right? Some of the biggest, most populated countries in the world and projected to be one of the fastest growing across the entire world. That drives demand. We also have rising incomes, right? A growing middle class, more affluent people that are now, have a higher disposable income that can afford to travel. And that unlocks, a high potential of demand coming out of the region itself. And then we look across also, we have growing proliferation of low-cost carriers in the region, of course, globally as well, which enhances connectivity and enables a lot of this travel to occur, not only domestically, but also regionally and internationally as well. And I think these 3 factors coming together gives the Asia-Pacific region quite a good tailwind in pushing forward the fast-growing demand. Will be one of the largest, the largest region, in terms of air travel demand over the next 20 years.
And no other region in the world has that unique blend of, they might have similar factors, but just not on the scale that we do. Is that what you mean?
I'd say yes, exactly. Coupled with the fact that you have rising incomes across the board, very fast growing economies, right? If you look at Southeast Asia, Indonesia, Vietnam, very fast growing economies, China, India as well. And these all fuel the, ability, right, to afford travel in itself.
Right. And the big markets that exist, Europe and America, are big but stable. They're not going to grow much.
I think these are more mature economies, obviously developed economies, relatively large, but obviously not as large as Asia Pacific. But, if we look in terms of projected economic growth, given their developed economies, they tend to be a bit more stable and the air travel market there tends to be a bit more stable across the next 20 years as well.
Coming to the downsides and the supply chain, literally planes can't be built fast enough. Airbus and Boeing have huge backlogs. And I remember your own forecast, Alton's forecast, was some models 10 years, right?
Yeah, exactly.
It's pretty crazy. For example, if regional airlines can't get planes, you join the back of the 10-year queue. How do you grow, actually? That's going to be really hard.
That's a good point, and that's something that a lot of airlines are struggling with today. Look at last few recent months, there's been quite an increase in number of orders, both narrow bodies and wide bodies, and now the queue is slowly getting longer. It's a little bit further than 10 years now.
What's your latest estimate? Is it more than 10 years now?
I think if you look at the current backlog, it's about 17,000 plus aircraft that have been ordered but not yet delivered. Global commercial aviation fleet is around 30 1,000 today. So it's about slightly more than half of the entire commercial fleet. I mean, the good news is that, Airbus and Boeing are slowly ramping up their production rates. They are increasing from where they were during COVID. They've had challenges along the way, supply chain issues, labor shortages, part shortages, engine shortages. But they are not out of the woods yet, but they're slowly getting out of the woods. I think we've seen in the past few months, they've both increased their delivery targets, but of course, trying to reach their ideal target remains some gap there. As an airline today, if I order an aircraft fresh off the line now, it may not be 12 years, right? I may be able to get
Right.
earlier placements, but either way, it's going to be a while before I get my aircraft. And so I think they've had to turn to a multitude of ways to try and get around this if they're looking to grow. Most common one we see is that airlines are keeping the current fleet around a lot longer. Instead of retiring their aircraft at what they think is an ideal age, right? Say about 10 years, they're keeping them for 10 plus and closer to 15 years. And I think we've even seen this with Singapore Airlines, right? I think they've kept some of their 777s around for a little bit longer due to delays, in the deliveries of the 777X program. They've also pushed back the retirements of some of the aircraft that they originally did not intend to have. The good example would be the A380.
Oh, yeah.
Lufthansa mentioned that they would retire them going to COVID, and now they've sort of brought them back. Singapore Airlines have refurbished its fleet of A380s with the intent of keeping them around longer. Of course, they can always go into the secondary market, right, and try and lease an aircraft to supplement existing capacity and to grow in the market. But that remains to be a very tight market, very expensive market. So,
could you explain how often do airlines lease and why do they lease?
If you look at fleet statistics today, about half of the commercial aviation fleet is actually leased, and I think that percentage is growing. In terms of leasing aircraft, it presents a very capex efficient way, right, of growing your fleet. You can grow it quickly. It represents a efficient way of bringing in additional capacity, especially when you are waiting for deliveries to come maybe 6 years down the line, 5-6 years down the line. On the same vein, when we talk about leasing, there's also wet leasing of aircraft. Wet leasing including like crew, quite ACMI, right? Aircraft crew, maintenance and insurance from other...
That's like a full package.
Sort of a full package, right? I think we've seen some airlines do it to really get that injection of capacity. Most recently, we've seen Air Borneo, the new airline in Sarawak. They've wet leased 2 737s from Batik Air to supplement their international operations. And of course, I think they just launched international flights to Singapore just last month.
So this is the sort of thing like if you're an airline, you say, okay, I wanna capitalize on this route. I just get some wet leased aircraft for the short term and tide me over until I actually get my real delivery happening.
There's that as well, and then there's also, I think you'll see it more in the European markets, right? They do a bit of ACMI in for meeting summer demand. During the peak summer demand, you don't have enough aircraft. You bring an aircraft from hopefully another ACMI player, which doesn't need that aircraft during that period. It's a lot more costly, than leasing an aircraft long term. But the economics work out in this peak seasons.
The lessors, they need to get aircraft too. So if it's still a industry-wide aircraft shortage, do you think it's getting better now, or as we go further and further away from COVID? As the supply chain matures, Airbus and Boeing get better, do you think that the whole situation will improve?
I think as the OEMs increase on their production rates, I think obviously we'll see them catching up with the backlog. It's quite a sizable backlog to catch up to. If we look at the impact of these delivery delays, in the short term, it's actually helped to manage the increase in capacity in the industry. So in a way, it's been beneficial to the industry as a whole, right? Prevent sort of a massive increase or a higher increase in capacity, which helps with managing some of the use. Obviously, it's slowly normalizing, and in the long term, this should normalize as they catch up on the production rates. And as we've seen coming out of COVID, right? Right immediately after COVID, there was a huge spike in airfares, right? And primarily it's due to, lack of capacity, lack of aircraft in the market. But, as airlines manage to bring back their aircraft, as deliveries resume, that has thankfully come down a little bit. But of course, right now, other impact of higher fuel prices have pushed the airfares the other way up again.
Could other players like Embraer or Comac make a dent in that backlog? We even see Russian aircraft maker Tupolev trying to make aircraft too as well. Do you think any of those will play a part?
Embraer is quite an interesting player. I think they specialize in the small narrow body market with the E2s now. They currently have a backlog of probably just around 300 odd
and also
E2s
growing.
on order. Yeah. The backlog is a lot shorter for them, right? Production rate is something like 70, 75 a year they're targeting at. So looking at 5 to 6 years of backlog. But ultimately, it's a slightly different market that they play in from Airbus and Boeing. They're looking at the small, narrow body market. So effectively, what they're targeting are thinner secondary markets. So if you think about the likes of Singapore to some of the secondary stops that Scoot is flying to, right, in Malaysia and Indonesia, those are the aircraft that, really help to make those routes viable. But whereas if you look at Airbus and Boeing, the wide bodies aside, right, obviously long intercontinental travel, narrow bodies are really aimed at the trunk routes. If you look at Asia itself, Singapore, Bangkok, Singapore, KL, these are really where the narrow bodies are focused on. Embraer definitely, a player, but I think it plays in a slightly different market. Comac is also the other interesting one. I think the Chinese have made quite great strides in pushing out the C919, working on the wide body variant right now. But I think the main issue with the C919 is that it has an order book of about 1,000 aircraft, but mainly on Chinese airlines as well as Chinese lessors. So one of the key reasons is because it's not yet been certified outside of China itself. And so, for these C919s to take flight literally, right, to operate internationally within Southeast Asia or within anywhere else in the world, I think that certification needs to come first. That process will take some time. I think they're doing some initial work for EASA certification. And also, I think the other angle to it is that the operators will also want to see some sort of track record, which you're seeing in China now. Some of the countries in Southeast Asia have allowed some of the Chinese aircraft to operate domestically as well. Vietnam, Indonesia, Cambodia as well.
That sounds promising, actually. So maybe Comac could get its training wheels here in the region, and it would still be good for our region, I suppose, right?
I think they recognize Southeast Asia to be one of the key international markets after they step out of China. I think there's always the age-old question of can they challenge, Airbus and Boeing, the A and B in the market. Time will tell. Probably not in the near to medium term. They obviously need to work on to catch up. Airbus and Boeing did not get to where they are in a very short span of time. And I think it's going to be the same experience with Comac as well.
It's not like cars where, you only have a certain number of technologies to do, but also approvals and international acceptance. You really need that, right?
Exactly.
How about other structural issues? Stuff like air navigation and airport capacity might affect us. Southeast Asia getting a lot of shiny new big airports and stuff. Do you see any problems there? Or
so for the infrastructure is a key factor in supporting the growth across globally and especially in Southeast Asia itself. We see a lot of new greenfield airport projects, airport expansions, and a lot of it is really geared towards the future, right? We foresee strong growth in Asia Pacific, growing 4+% per annum over the next 20 years. And a lot of this infrastructure is being built to support that demand. Terminal 5 is a good example of that, right? Being built for the future. Primary reason is because airports are long-term infrastructure projects. You need to plan early, you need to get ahead of the demand. The one that impacts us the near term is actually air traffic controllers. I think we've seen a bit of, just today itself, we see Sydney Airport reporting certain delays due to a shortage of ATC or air traffic controllers. And I think fundamentally that is one of the areas where it needs to catch up with demand. I think coming out of COVID, we see labor shortages happening across the board. Air traffic controllers, pilots, as well as maintenance crew.
And that's still going on, right?
That's still going on. The challenge is how do you build up that pipeline? Looking at the industry, they've already put in place a lot of initiatives to build up that pipeline, training schools, training programs to make sure that they are able to support their manpower needs going into, the next 3, 5, 10 years as an industry as a whole. That shortage still persists. We talk about air traffic controllers, I think we've seen Singapore trying to...
I get the Instagram ad, it looks quite attractive to me. I'm too old, I think. To get a big bonus to sign up.
It's certainly attractive. And I think that recognizes the fact that, as you grow your demand here, right, you're going to need supporting infrastructure. And it's not just the hard infrastructure, but it's also the services as well. So the air traffic controllers, the maintenance engineers, who's going to maintain your planes, who's going to make sure that, your plane is not in the shop for a longer time than it needs to. And obviously the HO, pilot shortage, right? Because you need that to support your growth. And I think if you look at some of Boeing's forecasts, I think they have quite a big number that they're forecasting in terms of the demand for all these groups of people over the next 20 years.
We have such a big regional population and increasingly educated populace. Do you think that might help as well? I mean, people will be interested in these topics. And if the relevant aviation authorities push enough, push properly in what they need, we probably might get what we need, right, for the region.
I think with Asia Pacific, we benefit from having a large labor pool. In a way, also helps with the lower labor costs. That has made Asia Pacific as a region quite attractive to, if you look at some of the MRO providers, right? Asia Pacific is a very attractive region, large labor pool, lower labor costs, and with the right push, as you said, with the right training programs in place, the right companies in place, I think it has that opportunity to factors in place, right, to support the training of this, to support the growth that we see here in the region.
Okay, now we're going for our break on TransportBT. When we come back, we zoom into more specific tripping points that could stymie the region's aviation growth and how some airlines are already flying into turbulence.
Market Focus Weekly, now hosted by Howie Lim. A sharp weekly deep dive into what's moving markets in Singapore and across the region. With analysts and market insiders to break down the forces shaping the week ahead. New episodes every Friday, powered by the journalism of the Business Times. Find Market Focus Weekly wherever you get your podcasts.
And now, back to TransportBT, a podcast of BT correspondents.
Okay, we're back on TransportBT. I'm Derryn Wong, and you have Alan Lim from Alton Aviation talking about the region's aviation growth and what could slow that down. So we saw how oil prices have really affected airlines, and margins for airlines have dipped again. Globally, it's around 2% in 2026, the forecast, which is less than half of the estimated 4.2% from last year. That's thin to really thin, right? And that's not a good sign. I mean, obviously, we have a very special circumstance here, but we see that the airline business is very, very tough, right? And how do you see airlines in Asia Pacific operating moving forward, increasing, competition, more low-cost carriers? It's just going to get tougher.
I think this year has not been kind to the airlines. From January until June, IATA has halved the profit forecast, right, for all airlines across the world. I think if you look at net profit per passenger, I think it was something like $9 in the December forecast. And in the recent forecast, they cut it down to $4.5. The volatility, the high fuel prices, and they're not stranger to dealing with these crises. So the key is, how do you manage your costs? How do you manage where you fly to try and tide past this difficult period? It's hard to say, when oil prices will go back down again. So what some airlines have done in the past, obviously hedging has helped some of the airlines. Those that have not hedged have obviously felt the pain. But eventually these hedges will run out. And if these elevated fuel prices persist, the cost will start to rise. Airlines have tried to deal with this as well through fuel surcharges. But you're not able to sort of recapture the increase in fuel costs through fuel surcharges alone. A couple of reasons why. One is, in some places, there are caps on the amount of fuel surcharge that you can impose. So
from regulators.
From regulators.
Oh, wow.
So I think a good example, I think, would be Indonesia, right? They capped the amount. I think they recently has raised the amount from, 11 to about 38% of the fare. Second factor, more important factor, is really the commercial factor. So if you pass on all your fuel costs to your customers, they can always go to a competitor who maybe will not increase the fares as much. So that has reduced the ability of airlines, to fully pass on these costs to their customers. It's a mix of hedging, it's a mix of fuel surcharges, and the result is some airlines have also had to look to cut some of the unprofitable flying, right? So when fuel prices are low, sure, there are a lot of routes where it makes sense to fly to. Thinner routes where it makes sense under a lower fuel cost environment. But as fuel costs rise, these marginal routes start becoming unprofitable. And I think that's where you have to tactically look at your entire network and decide where do you want to fly, how frequent do you want to fly there, and decide, which routes to pull out on. I think across the world, a lot of the airlines that have been impacted by fuel prices, I think pulling out of some of the marginal routes, focusing on core trunk routes, potentially flights to some of the secondary or tertiary, smaller, thinner markets that don't make the cut will tend to be cut. They'll try and potentially consolidate some of their frequencies just so that they can try and reduce their costs, reduce losses on some of these profitable routes.
And industry reps always talk about over-regulation, and it ties into what you just told me about. You can't always pass on the cost to the consumers directly, and that limits your flexibility as an airline. Do you think in some places over-regulation could actually hurt the growth of aviation in general?
I wouldn't call it like over-regulation, but I think in some jurisdictions and some countries around the world, there are things like fare caps or taxes, that obviously make it less competitive for their carriers. That's being seen in some jurisdictions around the world, and that has impacted, the ability of these airlines to compete effectively, not so much within the domestic market, but more of internationally, right, with other international carriers that may not face the same caps or taxes. If you look at India, right, one of the chief complaints is around the taxes on fuel, aviation turbine fuel. If you look at typical airline, about a third, now probably more, of their operating expenses are fuel costs. In India, it's about 40 to 50%. And obviously now it's a lot higher. And I think that has been one of the key challenges for Indian airlines to be able to compete effectively internationally, but also manage their cost as well, especially with a population where they have limited pricing power. This is but one of the challenges that airlines in India, for example, that they face.
We've got our two titans of population in Asia, India and China. Obviously, that's where the action is going to be. What are the pros and cons for India that you see in aviation?
I think for India, the demographics make sense. Huge population, huge market, the trips per capita. So the number of trips on average made by each person in India, I think is far below what we see in some of the developed economies. And so that means there's a lot of potential in India. So the demand, there's no question to it. The issues that have plagued India would really be around stiff competition for any new player, the limited pricing power, and of course, I think the costs, right? The taxes and the costs that the Indian airlines face, regulations that have resulted in the Indian carriers having to pay a higher cost on it, the additional taxes that are imposed by, I think, different state authorities. Effectively, a duopoly in the domestic market in India obviously has made it tough for any new entrants to come in.
Is that purely a expenditure thing, or is it it's difficult to set up a new airline in India?
I'd say part of it potentially is just how the industry has evolved there. Obviously there's been a lot of airlines that have started and gone, in
Yeah.
India, and sort of the industry has quite consolidated or evolved around, the likes of Indigo, Air India now that has, acquired Vistara, smaller players, Casa, your SpiceJet that are still in play. With two large players in the domestic market, being a new player, and it's obviously difficult to enter the market, especially, given the high costs that's being imposed by the taxes in the market. Makes it difficult in terms of economics perspective, right, for any new player to come in. The other point to make is that because of the limited pricing power, that's only so high that you can price with high cost to begin with, and with a limit into how much you can charge, profitably then becomes a challenge. These challenges are not easy to get out of. Again, it's not purely down to regulation. I think it's many, many different headwinds that are facing them. Airlines around the world recognize that India is a big untapped market. It's definitely one for the future. I think there are a lot of issues and challenges that need to be overcome. The demand story remains intact. It's, how do you make it profitable to operate in this market?
And what about China? I mean, they're actually, compared to India, pretty mature. Internal traffic is pretty good, stable. Do you see any stumbling blocks there?
So domestically, I think the airlines have done well. I'd say for them, it's also around some of the recent economic challenges that we see that have reduced the disposable income of Chinese traveling, not only domestically, but more internationally as well. That continues to weigh on the airlines, but also the growth of high-speed rail within China. That is another factor that has also made it challenging for some of the domestic operations, especially the short-haul domestic operations, right? Because it's a lot faster to pop into a train station. You don't have to go through, security checks, get to the airport, 1-2 hours earlier. And I think that is also another factor that is, I wouldn't say stymieing the growth in the market, but it's one of the competitors, not just within the airline industry itself, but outside of it as well.
I mean, we saw something in Europe where you can't have an air route if you have a high-speed rail route or something like that that's competing there. And you literally are not allowed to have an air route, right?
Correct. I think it's in France, I believe, that has imposed that regulation.
Which I understand. And China's very big on green stuff. You think they could do something like that?
It's hard to say. But I think certainly China has been quite well connected from a rail standpoint, and the market will obviously work itself out. There are pros and cons with flying versus traveling by rail, down to the value of time saved. And for airlines is, about pricing it correctly, pricing at the right willingness to pay for the customer, but also high enough such that you're able to cover the increasing costs that you're facing. Again, not specific to China maybe, but specific globally as well.
Curiously, do you think any other global market could outstrip APAC in the next 10 or 20 years? I mean, Africa is a huge potential, but obviously they're still quite far behind Middle East.
I think if you look at some of the IATA projections recently, the likes of Africa, Latin America, they actually projected to grow faster than Asia Pacific. But the key point is that Asia Pacific is a huge market, right? It's obviously, if you add up China and India, it's easily almost a quarter of the world's population. And Africa and Latin America are probably far behind. Middle East as a market is really more for the connecting traffic. I think if you look at the Middle East as a source market, populations are much smaller than what we see in Asia Pacific. With the growth and support of the governments there, you have Riyadh Air that's upcoming, you have the ME3, you have Turkish Airlines. There'll be forces to reckon with in the global aviation market. And the short-term challenges aside, with some closures in the Middle East, they have obviously placed massive orders for new aircraft and believe they'll continue to grow. So will the airlines in Asia Pacific. That's where it all comes down to who can manage your P&L a lot better, who can manage your network a lot better and compete within this increasingly competitive market. The airline industry operates on a knife edge of profitability, and that's not going to change. It's always tough being in an industry, but it's a very attractive and interesting industry nonetheless. I've been in this industry for more than 10 years now, and it continues to intrigue myself and many other colleagues across the world. That's the thing that keeps us going from day to day. Being agile, it's being flexible, not only from a fleet and network perspective. How do you reallocate your capacity if there's an airspace closure, right? In the Middle East, how some of the Asia Pacific carriers or even the European carriers were able to direct more capacity into their current Asia to Europe routes, and those that were able to do so were able to benefit from the spillover traffic. Take a good hard look at your cost from fuel. How do you do the little things that allow you to save, even if you can save 1 to 2% of fuel, it's a huge amount, right? Your maintenance, your overhead costs, how do you do things a lot more efficiently? How do you do things in a more productive manner? Your crew productivity, your maintenance productivity. And I think that's something that we've seen a lot of airlines reach out to for help. And that's something that we ourselves do a lot of in advising these airlines and operators in navigating this very challenging industry.
Thanks for the great insight, Alan.
Very glad to be able to discuss with you today, and thanks for having me on the show.
That was Alan Lim from Alton Aviation. Stay tuned next week as we have an episode on the changing needs of home buyers and tenants. This episode was produced by Howie Lim and Chieh together with our editor Claressa Monteiro, and it was written and presented by me, Derryn Wong. Thanks for listening.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.